All right. Welcome to Management Decision and Control, another session with Samuel Ibanda of Achievers, professional trainers. We are here to, again, look at certain aspects of the Management Decision and Control paper. So today we want to interest ourselves on a question, which is in November 2018. It's a question that is around, this question is about ABC systems. Now, why the ABC system? Maybe just to give you a small idea about ABC. Now, ABC is one of the latest costing models. And with ABC, ABC comes as an alternative to the traditional costing method. Now, if you have done your reading very well, you'll be able to testify that the traditional method basically allocates costs based on generic generic features like, let's say, machine hour, labor hours, and so on. But ABC, for it, goes ahead to understand the activities and allocates basically costs based on the level of consumption of activities for each of the products. And that's why we call it activity-based costing. Now, activity-based costing is seems to be a bit more accurate than the traditional costing. Reason being because it bases itself estimates on activities, which activities are presumed to actually be the core aspect of any kind of enterprise. So that is why we consider ABC to be a little more. So many organizations have continuously taken on ABC as one of those models that they use in allocating costs, especially the overhead costs. Okay. Yeah. So mostly what you may need to know, especially attempting questions that are around this topic, is the idea of understanding what are the steps that you have to go through every time you have, let's say, a question on ABC. Most of these questions usually come a little bit similar. And in most cases, the examiner will give you most of this information. So yours is just to be able to identify the information at hand. So, of course, the key critical aspect when it comes to ABC is around identifying the activities. Remember, we want to base on these activities to to allocate our costs. So we need to understand what are the major activities that actually arise into our overhead costs. Okay, so different organizations, based on their nature, they could really have different activities. So you could have things like assembling, you could have ordering, you could have maybe scheduling. There are different activities that you can really have. And of course, from those activities, those are basically the points where we basically incur some of the costs. So you can see many of them there. So every time you come through a question, you'll actually realize that the examiner will be a bit unique when it comes to the different activities that they are giving. For example, this question that we want to look at here, this question of liquid plus, when you read through the question, you'll be able to get down here, you'll be able to read through, and you'll be able to see that they have activities, and these are some of the activities: the inspection, the material handling, selling and distribution, machine maintenance, and so on. Here they have been listed as costs, but in the same way, these are basically this activity-oriented costing. Okay, this activity-oriented costing. So that is just so you know. So that is the first critical step that you need to take when identifying activities. You can be able to read more about the activities from these notes which we provide to you. Now, after that, the next thing is to determine what causes the cost of each activity, which we usually call the cost driver. Now, one of the things that you come to realize is that for every question, as they give you, let's say, these costs that are activity-based, yours is also to think about what are the cost drivers of each of these. For example, quality inspection. What is the cost driver of quality inspection? Now, when you go through it, most of these questions will always have, let's say, certain kind of information that can help you determine what are some of, let's say, the cost drivers. A case in point, if you have, let's say maybe we have sales order frequency. If sales order frequency these are like cost drivers, you want to attribute it to the cost. Maybe the cost is the selling and administration. So the more the selling frequency, the higher the selling and distribution costs, because it's a driver. Okay, something like, let's say, administration costs. Yours is to go and look through what they have given you and see what could be the cost driver from this information for administrative costs. Of course, we have administrative staff. Okay, now for us to understand when it comes to ABC and why we are laboring to go into all this detail, is that in mostly the organizations that use ABC are usually multi-product organizations. Basically, they are producing more than one product. Let's say maybe if it's Coca-Cola, they're producing juice, they're producing water, they're also producing soda. So such organizations have, of course, they have the direct costs for each of the products. For example, they have the direct cost for juice, they have the direct cost for soda, they have the direct cost for, let's say, another product that they could be producing, or water. But they also have what you would call the shared costs. Basically, costs which are not specifically for just a single brand or a single product. And now these are the costs that we call the overheads, which we now have to figure out how to allocate them on each of the products. And the reason why we should go ahead to allocate them on each of the products, at the end of the day, we also want to make sure that we want to know, because cost determines many things within the organization, and it's a very critical aspect even when we are making decisions. So we want to determine what is the overall cost of producing a single product, let's say maybe a bottle of juice. So ideally, in the same way as we looking at, let's say, the direct costs, we should also be able to figure out, to understand what portion of the shared costs of the overhead costs can be allocated to this single unit of juice. So that can also help us to even determine things like price, make analysis like around product profitability, and also make different other decisions that could be within the organization. So that is why it's very important that we appreciate how ABC comes in and why we need to be able to allocate. Like I earlier indicated previously, organizations usually used the traditional methodology, okay, of allocating costs. And for it didn't go to look at things like, let's say, activities, things like, say, maybe look at, it was basically only considering things like machine hour, labor hour, and so on. So a case in point, if you have juice and you have, let's say, water, and then you have soda, for it to look at, for example, how long does maybe soda take into let's say, the packaging environment, okay, or maybe in the how long does it spend in the machine for it to get out? So it would look at, let's say, the machine hour. So it would allocate overhead costs based on, let's say, how long each of the products spends within the machine. Let's say they are sharing a given machine. Now that alone is not proper for some products, especially for products that are of different values. Okay, for example, if you're working into, let's say, even if it's a normal beverage company like soda, water, and juice, you know very well that these are totally 3 different products with different values. So if yours is just allocating based on how long they spend, let's say, within a given machine, ideally you'll end up giving them a wrong cost estimate, and that will also translate within even the pricing, okay? Because, you know, some organizations use the cost plus pricing methodology to be able to determine the price of some of these products. So that is why we're seeing that ABC is being used by most organizations, because for it helps us to actually be able to allocate some of these overheads in a much better way, okay? So we have said that our first step of this process is to be able to determine the activities, basically the activities that cause costs within the organization, okay? And like I said, different organizations, based on the products, they could have different activities. Now, the cost drivers, we have also looked at them and how the cost drivers basically come in, okay? So yours is just to look at and say, let's say maybe inspection, what causes, what are the cost drivers? What is that one item, maybe element within the organization that if it increases, it means that, let's say, the inspection cost will also increase, okay? So you need to be able to relate those. Like I said, if you're preparing for the exam, in most cases, the examiner will give you information around the activities. They'll also give you around the cost drivers. Now, sometimes you have to make sure that you're matching the cost driver to each of the activity, okay? Because sometimes they will not break it down for you. Sometimes they will tell you that this one is, its cost driver is this. So yours is just look at the narration and be able to know that this cost driver is for this cost driver is for this, just like the way we have this information from here, this information of material movements up to number of administrative staff. These are cost drivers up here, and then down here we have now basically what you would call the activities, though they are underclassified here as costs, but these are basically, I think you can read and see. So when you see, for example, material handling, and you're looking for its cost driver, when you come here, you have to look for something that is so much to do with material handling. So for example, number of material movements, we are seeing it to have some inclination on material handling. So that will be the cost driver that you'll be able to use, okay? Yeah, so that is what exactly happens. Like I said, it will always be for a multi-product kind of business. So they'll be able to also to give you, what they'll always give you is they'll give you each of the cost driver on each of the products. Now, in most cases, definitely they will give you these costs as a whole, because these are the costs that ideally we have to be able to allocate to each of the products, okay? So that is very important. So once we have determined what causes each of the cost of for each activity, which is our cost driver, usually our next step is to be able to collect costs of each activity into a cost pool. Now, a cost pool, if, for example, you have, let's say, come up with your respective activities here. By cost pool, we mean that you're going to, if it's assembling, you're going to collect all costs that are within assembling and you put them together, okay? And that will be an assembling cost, and that will be its pool, okay? So for example, in the question that we are trying out here, this question, you'll actually realize that if they give you quality inspection and they give you this 15,075, so this is like the cost pool, okay, for all quality inspection costs. If the quality inspection involves inviting maybe a quality inspection officer, involves fuel, involves maybe some stationery in recording, maybe there's a quality inspection book and so on. So all those costs will be put together, and that's what we call a cost pool. And that should be our third step when it comes to the ABC. Now, in most cases, like for examination purposes, the examiner will give you how much each of let's say the cost pool costs, and you'll be able to just be able to follow through the next step. So this is what exactly happens. And then the other critical aspect here is to calculate what you call the absorption rate for each cost driver. The absorption rate for each cost driver. Now, why that is very important, especially when it comes to a question that has requires us to use ABC, is because they have given you these costs, and these costs are as a whole. These costs are for the overall organization, okay? So ideally, you have to be able to calculate the cost in terms of the cost driver rate by using that information, as well as the information when it comes to these so-called cost drivers. Now, let's just look at one here. For example, we have number of material movements. Now, number of material movements, as we have seen, this company has 3 products, has J, B, and H. So J, B, and H, these are the 3 products. So we are seeing that we have 750 for J, 1,315 for B, and then we also have 2,000 for H. Now, in this case, we have to make sure that we actually do what? We have to make sure that we get the total of the total number of material movements, okay? We get the total of the number of material movements by adding this plus this plus this. And after we have added those together, ours is now to get this material handling cost, okay? And divide it by the total number of what we have gotten here. Now that will give us like the material handling cost per what? Per material movement. That is what we call the cost driver. And that is what they are trying to implicate here in the narration, where they are saying that a cost driver rate is the overhead activity cost, like let's say material handling, divided by the total appropriate cost driver. The total appropriate cost driver. That should be able to give you the cost driver rate. And once you have gotten basically the cost driver rate, now that can be able to help you to actually find the total overhead cost for each of the products, because this cost driver rate is going to help you now allocate that overhead across the respective products, because you've gotten the rate, and that rate, whatever you have gotten as the answer, is basically sort of like, let's say if it was material handling, you have gotten how much is your material handling per each what? Per each material movement. So you can be able to use that to multiply across each of these products by, let's say 750, by 1315, by 2000, to be able to determine how much is the portion of each of the costs on each of these products, okay? Yeah, so that is important for us. And then, of course, the other is once we have done that, then we can be able to determine our overhead cost per unit of each of the products, okay? So that is what we basically do when it comes to ABC. Of course, it has its disadvantages and advantages, which you can be able to read here. But so you just know that the ABC can also helps us also when it comes to customer profitability analysis, okay? So sometimes the examiner loves combining these two topics together, and because they are related, so they will bring you, let's say, in terms of also different, let's say, different products, and then they expect you to do an analysis, okay? Still with an ABC related to that, okay? And when you look at, for example, this question, I just also wanted to share it. It's actually in, this is August 2019, MDC. You get to realize that when you look through this question, you'll be able to see, let's say, the different costs that this organization has, as well as they also give you different information to do with the cost drivers, okay? Like this information is to do with cost drivers. And then once you get down, you also get the cost pool or the fixed costs as they are provided here. And then now you have to be able to, of course, go through the process that we have just gone through to allocate each of those costs on each of the customers. And this question at the end of the day was even asking us to advise the finance director on the less profitable customer in the quarter ended 31st March 2019. So this is a question that was trying to embed customer profitability analysis as well as ABC. Now, why customer profitability analysis coming in here is the fact that, you know, these days, because businesses serve different customers. I'll give you an example of a telecom business. A telecom business may have customers who take on calls, okay? People that subscribe for calls. There are also people that subscribe for messaging. There are also people that subscribe for data, and then maybe customers that subscribe for mobile money. Now, each of those class of customers, the company basically makes a different amount of profit on each of the customers. And why bring in ABC in customer profitability analysis? Because even in serving your customers, each of your classes of customer, you also have what you call the shared overhead costs that you incur on all your class of customers in general. For example, a telecom company will have an administrative, let's say, office, will have a CEO who oversees all those kind of products. So if you want to get how profitable each of the product is, that means that you get the direct costs for each of, let's say, each of those products, and then you have to get now the other overheads and allocate them to make sure that you get what portion of the overhead costs relates to the calls, what portion of the overhead costs relate to the messaging, what portion of the overhead costs, let's say, relates to mobile money, and so on. And then you're able to get, let's say, because when you speak of profitability, here we're now also bringing the aspect of sales. So in most cases, in this such scenario, the examiner will give you also the sales prices that you'll be able to use, reduce the costs, and you're able to get the profit for each of the customer. And then you can be able to advise management on how profitable each of your customers might be, okay? So that is what you might want to expect. Yeah, but it's something that once you understand, it really comes very much easy. I think you can just see the structure of it. As you can see, it looks at the revenues and then goes ahead to look at the specific costs. Now, of course, here, this one is a bit generic, but one of the things that you need to know that every time we are trying to look at, let's say, a profitability statement, we have two classes. We have the variable costs. When it comes to costs, basically, after we've looked at the revenue, we have the variable costs, and then we have the fixed costs. So the ABC comes in at allocating the fixed costs, because the fixed costs are the ones that are shared across the different products. So we have to find a better way of how to allocate this across the respective products, okay? So I just wanted to give you that kind of small background before we can just run through this question so that you can be able to know exactly what this might require you, okay? So I just want to run through a little here, okay? So we can see exactly what this question required. So they're telling us that Liquid Plus Limited, LPL, is located in Mende Sub-County, Wakiso District, and deals in production and distribution of Judo, Booster, Hammer, energy drinks. The production of these three products is done using the same machines, labor, and share a centralized store. Now, this is the statement where the shared cost comes in, what I was talking about, where you have to be able to allocate now how much costs we incur on these shared costs. You have to be able to allocate them to Judo, Booster, Hammer, and energy drink. And that's where now the ABC comes in to allocate the costs that we incur on these shared facilities. So they are telling us that LPL has been using the traditional absorption costing system in charging overheads to cost units. They are telling us that in the recent body meeting, the newly appointed finance director highlighted the need for adoption of the activity-based costing ABC system. He said that this costing system will reduce on the contemporary challenges associated with the traditional absorption costing system currently being used by the company. LPL has been absorbing fixed overheads to products using machine hours. Now, this so-called LPL, by absorbing fixed costs to products using machine hour, this is the traditional method, and this is the alternative method to ABC, which I said this one allocates costs, fixed costs, either on machine hour or labor hours. Basically, it allocates on the generic parameters, okay? compared to ABC that allocates based on activities. Okay, so they have been using this. Then they are telling us that they provided this following information in the following budget for the third quarter of year 2018. So they are telling us that raw material concentrate per carton kg, they have given us the information there. They have also given us the direct labor hours per carton. Okay, and you know very well that that will help us, the materials will help us to determine the material cost. The direct labor will help us to get the labor cost. And then we have the machine hour per carton, as you can see, 12, 16.8, 14.4. And then we have the production in terms of cartons, which is 6,000, 9,000, and then we have 12,000. And then we have the selling price per carton, which is 38,400. We have 60,000, then we have 48,000. And then we have the number of material movements, which is 750, 1315, and then 2,000. Now, of course, the reason why they gave us the selling price here is, of course, I think we shall be able to determine some element of profitability somewhere, okay? Just in case that is asked. So they now give us this information. Now, this information, when you read it and you're very familiar with numbers on ABC, you'll actually realize that this information I've given you here, these are cost drivers, okay? Even as you get down to see the different costs that we have at hand. So they are cost drivers for our fixed costs. So we have the number of material movements, we have the sales order frequency, then we have the machine maintenance hours, then we have the number of administrative staff, and then the budgeted net profit as provided there. So they have also told us that the company has an underground well where water for diluting the concentrates is extracted and processed before being used in production. The production of B and H require more part-time workers than the production of J. The part-time workers are involved in packing the products. The products are packed in cartons of 24 bottles each and stacked in batches of 48 cartons. All products are packed in 400 milliliter bottles. So that they go ahead to give us the information here where they are saying the following estimates were made for the third quarter. So we have variable costs. We have concentrate cost per kg. Right there, we have the direct labor cost per hour. We have the other direct material per carton. And then they also give us the fixed costs, which is quality inspection, material handling, selling and distribution, machine maintenance, administrative costs. And then they're asking us, required, assess the impact of AB system or the product profitability for the third quarter of the year 2018, and justify why AB system is the most preferred to traditional. So the aspect of product profitability is actually coming in here, okay? So the ABC helps us on the costing, and then we can be able to compare with the price given and be able to determine the profit of each of our respective products, okay? Now, so we know the ABC, we know the ABC different steps. And we say that the first step we should do when you are looking at ABC is to identify the activities that cause the overheads. So these are our overheads. These are our overheads, which is the quality inspection, material handling, selling and distribution, and machine maintenance, and then administration costs. So we have already been given in terms of their activities in general. Now, they have also helped us to give us the cost pool. Now, before even we look at the cost pool, the next step when it comes to ABC is to determine the cost drivers. So if you have quality inspection, you have to make sure that you have to find out what could be the cost driver for quality inspection, okay, as provided to us right there. So we can see that we have, of course, we have different information that has been provided to us, but ours is to find what exactly can we allocate for each of our respective products, okay, at hand. So now, when you look at here, when they give us number of material movements, let's just first allocate those that are easier to allocate. We see that material handling is so much related to number of material movements. Then we see that selling and administration is so much to do with the selling order frequency, and then something to do with machine maintenance is so much to do with machine maintenance hours. And then the administrative number of administrative staff, we see it being so much here. So we don't see something that is direct on quality inspection being provided here, but since we have what we have been given in terms of, let's say, the number of cartons that we have at ground, because they have given us the production, the cartons that are being produced. So quality inspection, we shall allocate it based on the production cartons, the quantity that is being produced. Okay, if they had given us maybe something that is related to quality inspection, then we would have allocated it based on that. But that is what we shall be able to use, especially for whatever. Every time they don't give you maybe a given cost driver, then you can be able to use the units. Okay, yeah. So that is what we basically have. Now, if we have the information, we have the cost pool. We also have the cost drivers. Now we can determine our cost driver rate. Okay. Now, what are we trying to all aim at? Remember, they want us to assess the impact of AB system on the product profitability. So when they speak of product profitability, it means that in one word or the other, we have to do something like revenue less costs, okay? Or the price less costs. That is what we basically have to look at. So what I'm going to basically do, I'm going to draw a profit statement for each of those products. So let me just try to open Excel for me here, so that we can try to see how it looks like. So this is my Excel. So I'm going to do basically a profit statement, okay? Since they have brought in the aspect of assessing what? Assessing the profitability. So what I'll do liquid plus limited. So we'll just put it here, and I'll call it profit statement. So that's the profit statement. So profit statement, of course, has revenue and then has cost. So let me make columns for each of the products that I have. So if so, you know, they have three. These are basically, these are three products. Okay, they basically have three products at hand that we are going to look at. So let me just put the three products. So we have judo, we have the booster. Just try to. We have the booster, and then we have the hammer. Okay. So since it's a profit statement, remember we are going to look at the revenue, and then we'll look at the costs after some time. Okay. Just trying to note it to explain to you. And then after that, we'll be able to get the profitability. So now ours is to now look at, even before I look at the costs, for me to use the ABC, main is to first look at the revenue, okay? Since I want to go a bit systematic, main is to look at the revenue. So from the information provided, we have some information here. So we have production in cartons, and then we have the selling price. We have the production in cartons, and then we have the selling price. So ideally, it means that we can be able to, of course, having to believe that the production is equal to the selling, okay? What the number of cartons that we sell, because we are looking at specifically this quantity of cartons. So I can be able to get my total revenue from each of these, because this is, these are the cartons that we produce, and this is the selling price of each of them. So I can be able to get my revenue by getting 38 times 6,000, 60 times 9, 48 times that. So I'll just try to pick this information and put it into my Excel right here. Just a moment. Actually put it here. Okay. So this is what I basically have. So I can be able to get my revenue, by just multiplying this times this, okay? So I get about, that is 23, that I can cascade this down since I'm using Excel to get those respective values. So this is the revenue that I generate from these products, okay? And that was the only information that they provided when it came to revenue, okay? That is the only information they provided when it came to revenue. So once I have my revenue, I now have to look at my costs, okay? I have now to look at my costs. I'll just reduce this space here. So for costs, I have variable costs, and then I'll have the fixed costs, okay? So mine is to look at my variable costs that have been provided in the question. So I'll just come here and look through and see. So at the start of the question here, they gave me some information here on raw material and the direct labor, which I know very well. These are the variable costs. But also down here, they gave me variable costs, and they said concentrate cost per kg, the direct labor cost per hour, and then other direct material per carton. So for me, what I need just to, because since they have given me this as per kg, if I want to get what is the cost, concentrate cost, and let's say J, I'll be able to leverage on the 3.6, okay? The 3.6 per kg there, and be able to also look at in terms of how many kg, in terms of cartons that I have at hand, okay? Because they have told me that this is raw material, so this is the concentrate per carton. So I need to be able to determine the kgs by multiplying the 3.6 times the 6,000 to get me the total number of kgs that I can now multiply by 4,500, okay? That is what basically I'll be able to do to determine my raw material. So for me not to, let's say, not to have a lot of information when it comes to, let's say, my Excel, I can decide to have a working, okay? I can create a working somewhere so that I can basically just come and put the whole figures here. So material cost, what I'll do, I'll just have a small working. I'll call this my working. So working one, and you can do the same thing for the revenue. You can also calculate this aside and just bring the revenue, okay, whatever you choose. So for materials, I want to reach from here. What I'm going to basically do, remember we have 3 products, J, B, and H. So material costs. So that is what we basically have. So then I'm going to come here and pick this information. Remember, this is the first information that I need. So I'll just have right there. I'll have that. And then the next thing I'll also have right here is of course, I'm going to look at now, since they have given me, remember that is per carton. Now I also have to look at the production, okay? For me to get the kgs that I need to multiply by what? By the 64500 down. So I'll just put this here. Okay. So since this concentrate is per kg, I'll say total kgs is this times that. So those are the total number of kgs at hand. Now they have told me of how much is each kg. So when you come here, each kg is at 4,500. This is what we have on each. So I'll have my total material costs. Will be that times that. So when I cascade that, I get that it's 972,352 and so on. So if I'm to bring my material costs in my question here, I'll just bring it as I have the respective values, okay? So that is what I have. So once I have my material cost, mine is now to go back and look at how labor is, okay? So these are the direct labor hours. So direct labor hours per carton, I also have the number of cartons, so I'll be able to find the total number of hours for the overall number of cartons on each of the products. And then also, they have given me the direct labor cost per hour. So once I have determined the total number of labor hours for each of the products, based on the number of cartons that they have, I should be able to find how much labor cost is it for each of the products, okay? Yeah, so that is what I'll basically be able to do. So once I pick this and take it here under my working, maybe I'll also do this, and this should be labor. This should be labor. Okay, that is what we basically have. So the production cutoff remains the same. So I'll just try to copy that and bring that there. And then in terms of total number of hours, the total hours will be basically this times that. Which gets me to 5,760, 10,800, and 12,960. Then I can now bring in how much is per each labor hour from the information given to me. When you move down here, we have the direct labor cost per hour, which is 6,000. So just come here. The direct labor cost per hour, which is 6,000. So I'll just get this times 6,000 and cascade through the same thing, okay? Basically, I've been able to multiply by 6,000 on each of the total number of hours. So once I have that information, I can now move, okay, this is my total labor cost. Remove the per hour, okay? So I can just pick these values and put them under my profit statement. So this is the labor cost. Like that. So once I'm done with labor, mine is to go back and look at the other variable cost, which they have told me is other direct materials. So they have told me that other direct materials is basically per carton is 5,325. So mine is just to now get this 5,325 and multiply it by each of the cartons. Remember, these variable costs are all dependent on the production. Okay, we incur the variable costs during the time of production. So I'll be able to multiply by each of these cartons. Okay, so what I'll do is I'll come here under my working part 3, and the other one is material cost other. Just other direct material. Okay, so I'll have my production cartons. I'll just bring them here. And I'll say, now we are going to multiply it by the per carton, the indirect material per carton, okay, which is 5,325. So I'll just get that, put it here, put it here, put it here. Now I'll get total other direct materials, which is this times this. So it gets me to those values right there, okay, as my other indirect material. So I'll just pick them as they are and take them to here. So I'll come, this is other direct material. Right there. So that's what I have. So I can get my total variable costs by just adding the respective values that I have there, because I've been able to accumulate everything. So I can sum up. So that gives me 163, cascade it down, I'm able to get that. Okay. Yeah. Of course, I can get my total contribution. Contribution is revenue minus variable costs. So it's just basically this minus that. So that's my total contribution. But remember, the question is asking me about profitability. So I'll now look at the fixed costs. Now, from my question, you realize that I've been given my fixed costs. But my fixed costs have been given to me in whole sum. So I have to make sure that I allocate them to each of the products, okay? So each of the products, J, B, and H. So since they have told me to use ABC, ideally, I'm going to use the cost drivers that have been provided. So these are the cost drivers that have been provided to me, these ones, okay? So what I just need to be able to do is to now allocate each of the cost drivers on each of the products, okay? So I'm going to just do a small working and I'll be able to allocate accordingly, okay? So I'll come here to working. So these are fixed costs. So I have several of them. Here. So I'll just pick them as they are. So I'll post them here. So I'll call this cost pool. Put the amounts. Like that. So once I have that, now the next thing I'll also do is now to get the cost drivers, okay? I'm going to get the cost drivers for each. Now, like I earlier said, the cost drivers are usually provided in the question. So right here, we have different cost drivers, okay, as we have been provided. Let me just maybe try to copy them also, so that it's much easier for me. Let me first put them here. So basically for material handling, I said I'll use number of material movements. And let me also have the amount. Okay, I'll include that after. So we have material movements there. And then for sales order, sale order frequency, this one will be under here. Sorry, this was supposed to be under here. So machine maintenance hours will be there. Then for administrative costs, I'll basically pick this, okay? And what I was trying to basically mean is when it comes to quality inspection, I'm going to use number of cartons, number of production cartons, okay? So this is very critical for you to show the examiner, okay, on what are your cost drivers, because this is this like we say, this is the step that we go through when we are trying to do the ABC. Now, after we have done this, we have to also get the total of the cost driver. Okay. Basically, what we are going to basically do is we are going to add the different values of the cost driver, okay, that we have at hand. That is what basically what I'm trying to mean, okay? So from this information we have been provided, ours is to find out, okay? So we have, when you look at this information, so we have 750 plus this plus this. Okay, let's start with this. 6,000 plus 9,000 plus 12,000. Okay, we should be able to get the total. 6,000 plus 9,000. This is 15,000 plus 12,000 gives us 27,000. So basically, this is 27,000. For material movements, I'll use this information down here, 750 plus 1315 plus 2,000, okay? This gives us 4065. Then here, this will be 78 plus 116 plus 156, gives us 350. This gives us 24 plus 9 plus 12 gives us 45. And then the last one gives us 9 plus 6 plus 15, which gives me 30, okay? So once I have that, the next thing I have to do is calculate the cost driver rate. Cost driver rate. So cost driver rate is actually this divided by this, okay? So I'm going to get 0.56 there, cascaded down. Now, you know that these values from the information they have given me, so that I'm able to leverage on the decimal places as well. These values down here were in thousands, okay? So mine, for me to get at least numbers that are a bit absolute, I'm going to multiply by 1,000. So multiply by 1,000 gets me to that, okay? So I'll do the same thing. This divided by this times 1,000, okay? And I just cascade down, I should be able to get the same values. Oh, sorry. So I'll work, since it's a cost driver rate, I'll be able to work to the nearest what? I'll remove I'll just round off, okay? So this is what I basically remain with once I bring in their thousands as well. So these are my cost driver rate, okay? Now, if I want to allocate these fixed costs, okay, across to the different products, I've been able to get the cost driver rate. I should be able to get how much is it for each of the products, okay? So what I'll basically do, once I come here, I'll just come and get this and come and put it under here, okay? Now, I want you to observe very critically here, okay? Because I'm going to use this information here. So for J has, in terms of quality inspection, the cost driver rate is 558. And remember, it is based on the production cartons, okay? So if I want to get how much is for J, I have to get the production cartons and multiply it by how much I have in terms of the cost driver rate. Okay, I hope you're able to see that exactly. So let's try and see. So if it means, and I'm doing it directly other side. So for here, quality inspection will be the 558. It's going to be 5558. I think it was 558, just to confirm. Yes, 558 times 6,000 times 6,000. So that gets me to, it gives me about 3348. This is what I have. Okay, 3348. So if I want to determine the quality inspection and booster, I'll come to my working here, get 558 still multiplied by the production cartons, which is 9,000. So this is 558, okay, multiplied by what I have there, which is 9,000. So that gives me 5022. Okay. Now, in the same way, now you can be able to. I hope you are following.
Yes.
Okay. So let's see what we have for 12,000. Okay. So 12,000. This would mean that we have this is 48,000. Okay. So 48,000 times our cost driver rate, which is 558. So we get about sorry. It is 12,000. I think I picked the wrong figure. This is 12,000. So gets me to 669. Okay, that is what I basically have. Okay. Now, ideally, this should be able to add to your overhead at hand. Okay, it should be able to add to overhead at hand. Now, this gives us 15,066, which is a bit somehow higher than this. Okay. Now, for you to basically avoid this much, for it not to come through as that, what you can do is this. This is another way of getting these values. Basically, since we know that this is our cost pool, which is 15,075, what we can do is get 558, okay, because this is our cost driver rate that we have at hand. So since we have 15,075, because the reason why we are getting that, I think, is because we rounded off here, but it should be able to give us the same picture. Okay, maybe before that, let's try to do something for material handling, and we see how that exactly. Let me first leave the figures there, and we see how material handling comes in. Okay, for material handling, we have 10,569. Okay, and our cost driver is 2,600. So what we can basically do is look at, remember, the material handling is based on number of material movements, okay? And we have the number of material movements provided to us right there. So we are going to be able to use that to be able to determine how much we should be able to charge under each of the items, okay? Yeah. So if it is judo, okay, if it is judo, judo we have 750, okay? So 750 times, let me just do it from here. 750 times the 2600, okay? So gives us 19,1950. That is basically what we have right there. And then for this, we can have we are going to use 1315 for the next product times 2600. This one will give us absolute value since it's so that gives us 34,3419, and then this gives us 2600 times 2000. 2600 times 2000, which gives us about, is it 5.2? Yes. Okay. So this one comes in, I think this is because we rounded off here, but still, anyway, at least we've been able to allocate accordingly. Let's try selling and administration. So selling and administration is 180, 500. Okay. So 180, 500 multiplied by, we have 78 under judo. So this is times 78. So that gives us 14,079. Okay, that is what we basically have there at hand. And then in case we want to determine for the next product, we shall use 116 times this. So 116 so it gives us 20,938. So let's try to do this. This times 156. So it gives us 28, that, and then machine maintenance. Let's just use the same methodology, 280,000, and I'll use this. So 24 times 280 and a jumbo, 280,000, 280,000 times 24 gives me 6.7. Okay, that is what we have there. Then 280 times 9 gets me to 252, 520. Then 12 times 280 so gives us 3.36 right there. Okay, then let's do the administration costs. Administration costs, we have 1875 times 9. Sorry. So gives us that. And then we have this times 6. And then we have 15. So 15 times the 1875 gets us to 28125. Okay. So it's basically 28125. That's what we basically have. So it is this that we got a difference, because this matches what we have, the 56 to 50. This also matches the 12600, 63. So that one also matches. And then this material handling, let's see, 10569 also matches. What is not matching is this, because of the rounding off. Let's just use let's use a decimal place, which is let me use 2 decimal places, 558.33. So I'm going to make an adjustment on this. I'm going to say 558.33. Actually, since it's 3 decimal places, I'm even get it down to 3 decimal places, 0.333. 333. Okay. So it is that one. Okay. It is at least there. It is 15. When you add together, it gets you 15,071 something, which is about not so much different from that. Okay. You may not, since this is an allocation, you may not really get very exact, especially where there's rounding off, but at least we can be able to get the principle. Okay. So let's try to get the total fixed cost on each of these products. So there we have 42. And then here we have 71 and then 43. Okay. So we can get, we should be able to get what? Let's get our profit now. So our profit will be contribution less fixed costs. This minus that. So it gives us 23, 716, 31, 773, 22, 600. So this is what we get as our profit at hand. Now, remember, we go back to our question and see what our question was requiring us to do. When you get to our question here, they're asking us that assess the impact of ABC system on the product profitability for the 3rd quarter of year 2018. So we've looked at, we've gotten the profit as per what? As per ABC. Now I want us to look at this information right here. They have given us the budgeted net profit. This is the budgeted net profit, and this budgeted net profit is based on their current method. Their current method is traditional. They are using the traditional method of doing what? Of allocating fixed costs to machine hours. So based on ABC, we've gotten also different profits. So once you're making the decision, you have to bring now the aspect of the budgeted profits here as well. So those are the budgeted profits that they have given us in the question. So we have to compare this profit we have gotten here with the budgeted profits, okay, and be able to advise accordingly onto the impacts. of using ABC. So as we can see, when you look at this product J, for product J, the profit has risen from a negative, a loss, to now a positive of 23,716. Okay, and the same thing for the next product, which is Booster, which is B. The profit has risen from 31. No, it has fallen from 45 to 31. Okay, that is what exactly has done. And then we also have to look at also when it comes to the last product, which is Hammer. This one has also fallen from 43 to 22. Now, what does this mean? It means that by them using the traditional method, it was indicating to them that actually this product was even not profitable, the judo product. But after using ABC, we can be able to tell that all the products at hand are actually profitable. And so from the perspective, like I said, ABC helps you to allocate your costs in a much appropriate way compared to the traditional method, which uses the allocation of based on machine hours. So ideally, by using ABC, the organization has been able to determine the right profitability of its products. And so Jumbo is no longer in a loss, Judo is no longer in a loss as earlier estimated within the budget. Okay, basically that is what we needed to basically provide when it comes to assessing the impact. That is what the examiner wanted you to assess. And then they also asked you to give reasons why AB system is most preferred. Now, from this calculation, we can easily have an idea of why organizations adopt ABC. But I would just encourage you to take some time to read through. We included this within our notes. Okay, just in case you don't have these notes, then you can easily reach out to me. We have advantages of ABC. Like I said, the first one is on the reliability and accuracy. Basically gives us a more accurate and reliable computation of the product cost because it allocates the fixed overheads based on activities, which is more to do with the cause and effect cost allocation compared to the traditional one that just uses the generic elements of machine hours and then labor hours and so on. Okay, so when you have reliable information, it means that you have a more proper decision making. And you know that for organizations that base on costs to price their products, for example, organizations that use the cost plus pricing, it means that if they use ABC, they will be able to price their products rightly. Okay, they'll be able to price their products rightly. So that is what you can think about in terms of the advantages of using ABC in this format. Okay, so that is what we basically did. So as we can see, the principle is determining the total cost drivers and getting the total cost driver rate and being able to allocate each of the respective costs on each of the different products and being able to find the total cost or the profitability depending on the scenario at hand. Okay, so that is what I basically wanted to share with you. And if you're following this live, maybe you could, if there's any question, you could be able to ask. There's no question, or in case you get a question, you can always ask that later on. Okay, yeah. So was this clear to my friends that are here for live session? Ivan, Jawhara, is this clear? Okay.
Yeah,
okay,
this was the best sum.
Okay, fine.
Very clear from the start to the end. Yeah.
Okay, fine, Kari. Thank you.